Today we're going to be talking about the tax deduction that's available to self-employed individuals for their Medicare premiums. It's a huge tax advantage. Most individual retirees that do not have businesses have to pay all their Medicare premiums with after-tax dollars in most cases. But if you have a business and you're over 65, you may have the ability to deduct those premiums against your business income and pay with them with pre-tax dollars. This can include your Medicare Part B premiums, Part C, your Part D prescription drug, if you have a Medigap plan that you're paying an insurance company for, or a Medicare Advantage plan, those could all fall within that deduction category. In this video, I'm going to cover how the deductions work to understand the difference between the individual Medicare expense deduction that you take on your personal tax return versus this Medicare premium deduction that you take on the business return. There are a bunch of limitations like the profitability of the business, the type of entity that you sponsor. Are you and your spouse potentially covered by an employer health plan if one of you are still working W-2 for someone else? And also what tax forms and documents need to file in order to capture the deduction. To start off, it's really important to understand the difference between two different deductions. The one deduction is for individuals for their total medical expenses for the year, and the other deduction is this Medicare premium deduction that self-employed individuals are allowed to take. If you are an individual that does not own a business, the way it works is you cannot take a tax deduction for those Medicare premiums until your total medical expenses go over a certain threshold based on your adjusted gross income. So what medical expenses in that category include are Medicare premiums, deductibles, co-pays, co-insurance, and other non-covered services that you had to pay out of pocket. The way the calculation works as an individual is to deduct those total medical expenses, they have to be above 7.5% of your total adjusted gross income for the year, which means you can't deduct anything until your expenses are above that threshold. So if your AGI is, let's say, $80,000, 7.5% of that is $6,000. So until your total medical expenses are over $6,000, you can't deduct anything. It unfortunately gets worse for individuals because those medical expense deductions are itemized deductions, which means you have to itemize to capture them. And with the standard deductions at such high levels for 2022, a single filer, their standard deduction is $12,950. For a married filer, it's $25,900. You would need enough itemized deductions to get over those thresholds before it would even make sense to itemize. Now let's shift gears over to these self-employed individuals that are 65 and older paying Medicare premiums. They have the advantage that they can start deducting those premiums from $1. They do not have that 7.5% threshold as long as the business is creating income. You need income generated by the actual business in order to deduct those expenses. You can't just go and create an LLC that's not producing any income and then take those Medicare premiums as an expense because there's nothing to deduct the expense against. So it has to be generating some type of net profit. It's also important to note that you cannot generate a loss from these Medicare premiums and then use them to offset other types of income. For business owners, it gets even better. Not only can you deduct the Medicare premiums for yourself, but you can also deduct the Medicare premiums for your spouse. So in 2022, the standard Medicare Part B premium is $170 per month. Now let's assume both spouses also have Medigap policies for $200 a month each. If you start adding this up, the business owner has their Medicare Part B premiums totally annual is $2,040. For the business owner Medigap policy, it's $2,400. Their spouse is paying Part B for also $2,040. And then the spouse has their Medigap policy for another $2,400. And when you total all that up, it totals $8,880 that as long as the business is producing at least that amount in net income, they can pay for all of that with pre-tax dollars. This tax deduction for business owners is limited only to the Medicare premiums. When we're talking about individuals deducting, co-pays and premiums and unreimbursed medical expenses, that's more on the individual deduction. When we talk about the amount that business owners can deduct against their income, it is just those Medicare premiums. However, if the business owner has really high personal medical expenses for the year, they could technically take the deduction of the premiums against their business income and then turn around, and as long as those total medical expenses without those premiums are over and above that 7.5% of AGI, they may be able to capture that additional deduction on the personal side of the tax return. Now let's talk about what type of business entities qualify for this deduction, and it's very broad. So you could be sponsoring a sole proprietor, you could be an independent contractor, you could be a partner in a partnership, an LLC, or an S-Corp shareholder with at least 2% of the common stock. The other benefit of this deduction for business owners is it's an above-the-line deduction, which means by wiping that income off the table, you're essentially lowering your AGI, which could make individuals eligible for other credits and deductions that otherwise would not be available. If you are sponsoring an S-Corp, the S-Corp can either pay your Medicare premiums on your behalf as a business expense, or the S-Corp can reimburse you for the premiums that you paid, report those amounts on your W-2, and then you can deduct it in your Schedule 1 of your 1040. Here is a little known limitation to this deduction. If you or your spouse are also working for some employer that has some type of employer health plan that you are eligible to participate in, you can no longer deduct those Medicare premiums against your self-employment income. It's not whether or not you participate. If you're eligible to participate and you decline, the same limitation applies. Then it will get the question, well, what if my spouse was covered by this employer health plan for part of the year that I was eligible for, but then they retire halfway through the year? Those months they were covered by the plan, you can't deduct your Medicare premiums, but after they were no longer covered during that tax year, then you can start to deduct them again. While this seems like an odd restriction, in reality, if you have access to some type of employer-subsidized health plan where they're picking up part of the cost, in many cases the benefits can be richer and the cost might be lower through that employer's plan than it may be through the Medicare side of things. Not always the case, but in many cases we've seen that. If you have multiple businesses in retirement, you have to select a single business to sponsor your health plan to be able to deduct these Medicare premiums. And it's often advisable to pick one of the companies that's constantly generating a profit large enough to offset those deductions. Otherwise, you could lose them. You will have to keep clean records to claim this Medicare premium deduction if you're self-employed. Some people are still working, they're collecting Social Security at the same time, and a lot of times they're taking those Medicare Part B premiums directly out of your Social Security. At the end of the year, the Social Security sends you an SSA 1099 form that lists the premiums that you paid. You may need that to file your taxes for the premiums, or if you're paying, insurance premiums for your Medicare Supplemental or Medicare Advantage plan to an insurance company, you'll have to have good records to total up those premiums that were paid throughout the year for the deduction. A note on self-employment tax. While these Medicare premiums are deductible for federal, state, and local taxes, they are still subject to self-employment tax, which are the taxes that you pay into Medicare and Social Security. If you are just finding about this Medicare deduction now and you've been self-employed and you've been paying Medicare premiums for the past few years, the IRS does allow you to go back and amend your tax returns for the last 3 years to go back and capture those deductions. Now remember again, you have to be showing a profit in those years in order to take the deduction of those expenses. A small disclosure on the end of this, I am a certified financial planner. I am not a tax accountant. For tax advice, please consult your tax professional. If you have any questions on this, please feel free to reach out to me at moneysmartboard.com. Thank you.